Morning, everybody. How are we all doing? Morning, Watch Check. Morning, Mumo. Morning, FTNet. How are we doing? Happy Friday. Long weekend, bank holiday in the UK tomorrow. Well, no, tomorrow, Monday even. So, yes. Next week, not here on Monday because bank holiday. So they get a whole long weekend of rain because that's what it does in the UK. Right. Let's start off with the indices. Have a quick look at where we're going this morning. Big break up on the FTSE. And the DAX is pushing as well. So bit of a gap up there this morning on the FTSE. So it might come down and do that before we break today. Find my pen. So yesterday was a bit of a crappy day. It was all right in the morning. And then it was good at the start of the afternoon, and then it went into complete rotation mode. So ended up with a loss yesterday. Couldn't do a lot with it, unfortunately. So market yesterday, as you can see in the US, that was the open. We kind of broke long, straight up into propulsion, back down again, stopped out, had to go at a second long, straight into propulsion, back down, and then finally did get up. So although it was a nice bull day, not a nice bull day, a little bit of a bull day, the way that it got there was the difficult part. So very big swingy legs yesterday, which is not conducive to breakout trading. It's not really anything. It's more of a slight up range, isn't it? NASDAQ was the same, obviously, because S&P and NASDAQ do the same thing. So managed to get a profit on the NASDAQ. NASDAQ break clean long, straight up to target. Took it off at the highs there and then stopped out in the second part. So the NASDAQ was a win. S&P was a double loss. And the Dow also yesterday. Couldn't do anything with it. It's just stop out on the up, stop out on the down. Mess. So bit of a crap day yesterday. Good movement, but not the right type of movement. It's a bit like leaves on the line, isn't it, in the railways? So it's just the wrong type of weather. But anyway, so just got a little bit of a loss recovery to do this morning. So it looks like we've taken a break. So DAX long, FTSE too small. We'll be taking the 10-minute range on the FTSE. And DAX already broken long. So we'll see where we go on that this morning. Right, we'll come back to that in a minute. Morning, Joe. Morning, Virginia. I've got another strategy I want to show you this morning, which is partly I've been working, for those in the members' rooms, you know, obviously, that I've been working on a kind of a mean reversion-based strategy to go alongside ORB. I've got a little bit further with it yesterday. So I've got this variation of the EA, which is pretty good. It still needs a little bit of work, but it basically takes a mean reversion. Yesterday is exactly what this is designed to take advantage of. So yesterday's price action, where it's kind of just out the top and then it comes back down again, it does a beautiful job of trading that. So that strategy basically I'm working on at the moment. It's in development, but yeah, it's pretty good. Nice equity curve on it. So I have tested it. I've robustness tested it with 45 variations because it's such a simple strategy. There's not really a lot of things you can vary on it. But I've tested it with 45 variations, and I'm testing it with trailing stops as well. At the moment, every single one of them is coming out profitable. So it won't lose money, or it hasn't lost money. But it varies from sort of 6 to 8K in a 6-month test up to 50K. So there's a wide variation in profitability on it, but there is no loss. So it's good. So it's very robust, but I need to do a bit more work on it. So I will be working on that, and I'll probably talk about that a little bit more in the member stream next Wednesday. So yeah, it looks good. Right. Just minimize the wrong thing. Did I minimize there? Right. So today is retail sales this morning for the pound. Positive. Not just positive, but super positive. 1.2%. So if you take a look at the pound pairs today, as you can see, I'm going into drawdown on my short, which indicates that the pound is obviously going up. So built bull move on the pound off the back of the retail numbers, but nothing dramatic. So that's where they came out. We had a move into those numbers, but when the actual numbers came out, not an awful lot. So we have got a little bit of a bull move on the pound at the moment. It's a bit jaggedy. It's trending fairly nicely up at the moment, but not substantial. So as you can see, against the CAD, it's not really doing an awful lot. Against the Swiss, it's not doing an awful lot. So it is slightly bullish at the minute, the pound, but not very. So it's kind of a very weak trend that we're in on it. So those numbers I was expecting a little bit more movement on, but we didn't get it. So we might get a little bit of an aftershock of that and get some movement on the pound today. It is positive. It's retail from last month. And obviously we haven't had the kick in of those tariffs. So cost of goods is going to go up, which means that retail might start to slow as those prices increase. But right now it's obviously positive. So we'll see if the market reacts to that today. We've got retail sales as well for the CAD this afternoon, and that's it. So there's no other news today. Monday, obviously, is bank holiday. And then next week, we've got the New Zealand dollar monetary policy. So their interest rate is coming out. And pretty much that's all it. So it's nothing, not really a very big impactive week next week. So quiet week. It's bank holiday week. It's also half term in the UK. So there'll be a lot of institutional traders off. Overnight, not an awful lot happens. We've had the retail sales come through there this morning. GDP for Germany went down slightly. But other than that, overnight news, there's not a lot. CPI went up for Japan. So this is, again, another indicator that Japan will be increasing its interest rates. We know they are. They're gradually increasing those interest rates. But inflation increasing means you increase interest rates to control inflation. They are using interest rates as an inflation control mechanism now, which they haven't done for the last 2 decades, which is why we've had negative interest rates. So that is now indicative of strength in the yen. So yeah, we might get some good yen movement today. But other than that, nothing much else happened overnight. Trump had a little party, waffling on with his mates about how rich he's made them and how rich he can make them in the future. But apart from that, dead. So you can see here the US dollar, the weakest currency at the moment. Right. So it's coming down quite a bit, that pound actually. Was that? Yes, no, New Zealand dollar strength coming through at the minute. So just quickly looking at the yen pairs, just to see if there's any reaction on the yen to that Japanese inflation news. Not a lot at all. So, right, let me just quickly look at where the breaks are going at the minute, and then I'll come back to FX. So long DAX, long FTSE. So 10-minute ORB on the FTSE is triggered. Longs. So upside targets for the DAX, very simple. Yesterday, Wednesday's high. So this is your high of the week. As you can see, this week we've gone virtually nowhere. So this was Monday. We had the bull day Monday, rotation on Tuesday, rotation pretty much on Wednesday. We did make a bull move, but then obviously that was immediately undone the same day. So that was a rotation again. Rotation yesterday, now today. So the best case we can hope for, I suspect, is a challenge on the highs of last week, but this week is going to end as a kind of bull candle. Actually, it's not going to end as, it's going to end kind of like that. A minute. So yeah, we'll see. Obviously, you've got the high of yesterday, which we are just about to run into now, which is this propulsion move from the day before. So if we crack that, we should be testing the highs. So that's a really good partial level. FTSE, we're bang in the middle of the propulsion move from Wednesday at the minute. So obviously high of the week is a double top, which is above that partial. So again, lovely. If we break this high and we get through this propulsion gap, i.e. the sellers from that low, we will come up and test that high. So both of those partials are really good levels today. If we can get a nice strong push. If we can break Friday's high, which is the first target, obviously, for the market this morning, we should be off and running. This will be a new EA or incorporated into the ORB. No, this will be new. This is different, completely different strategy. Yeah, ORB is ORB. You can't put mean reversion in a breakout strategy. Morning, Chris. How are we doing? Right. So let's have a quick look at the FX markets while we're waiting for the indices to go. So this morning, there's no ADRs. It is Friday, end of week. You've got 3 weekly range extensions at the moment. So that one there, which is obviously the Aussie CAD to the downside. So there's your weekly range. We've butted. Oh, that's a beautiful long. Really nice long opportunity there, Aussie CAD. I think I looked at this one on Wednesday and said about this low. Yeah, so this high here, we broke out, retested. That's 2-week low, last week's low, exactly where we are now. We just had a reverse alert and a retest. Doesn't get any better than that. Target upside propulsion if we're going to stay in a bear. So yeah, didn't quite get extended, but that's a really good buy spot there. You've got a nice backup, which is 125 ADR. So position 1, position 2, average. Get out on a pullback of that. That looks really good. Aussie CAD. So that's a nice weekly range extension. Euro US dollar. Again, extended to the upside. So that was your upside extension. That one triggered on Wednesday. So your reverse alert went in there and you retest. So you've missed that. It's already played out. And US dollar Swiss, which again we looked at on Wednesday as the entry. That 3-bar reversal retest into propulsion, which they've resold. So again, not great. That was the entry there. I said about taking that. I said, oh, I fancy taking that. Did we get an ADR out of it? 64. So depending on when you got in on that, it would have been there. Pretty much the same. So the hourly and the 15-minute reverse alert were pretty much the same. You'd have got 67 out of it, which is 3/4 of an ADR. Bad. So yes, that US dollar Swiss, that was extended, but it's not anymore. RSI's flat. The RSIs have been flat a lot this week. We haven't had an awful lot of movement at all. Pound New Zealand is the only thing really that's extended on the 4-hour. That's just about to give you a reversal alert. You've got 43 minutes left. So this hourly candle that's going in at the moment is now if depending on your broker, obviously, that is potentially where the reverse alert is, and you've possibly even already had a signal to go short on that today. But my broker's obviously done a lovely big gap down this morning, as brokers tend to do on New Zealand dollar pairs because they like to spread them. There's your M pattern there. So that's looking good for a short right now. That's a 4-hour RSI extension. Looking for a move back down from that RSI. So yeah, first entry short potentially on that one if you want it. That's a breakout of last week's high in propulsion. So this is grinding up quite nicely. So you're looking for a push back down of an ADR, then back up again. So obviously you can buy the pullback if you want to trend trade it, but if you mean reverting it, obviously this is the entry now. How far we're going to go? Who knows? We just had positive news for the pound, but that New Zealand dollar is really kicking in this morning. Lovely strong moves on the New Zealand today. Across the board. At the moment, obviously. Very strong. Aussie's probably strong as well. New Zealand is stronger. So yeah, we've got a strong Aussie move. So if you want to know, whenever you get a New Zealand move, you usually get an Aussie move and vice versa. As you can see, all the Australian pairs pushing this morning. Aussie, New Zealand is your gauge of which of the two is stronger. And as you can see, the New Zealand dollar is stronger than the Aussie this morning. So nice M pattern reversal going in. Reversal alert just about to trigger. Target down in propulsion. If you want to take an intraday trade on that Aussie, New Zealand, I'm already in it with 4. Just can't really quite get into profit on it. This, as you can see, I've taken profit on it twice now. Done one drawdown control. So I've banked on it twice, but I can't quite get it below the line at the minute. So I'm hoping that the market structure that's just gone in is going to confirm. So this is your lower high. So looking for an end pattern reversal out of this for a lower low. And that lower low is going to give me an opportunity to start doing a bit more drawdown control on this. So I'll probably close that one off as we get down into here and then shut that completely. So that'd be a nice little profit. And then I'm going to be left with those two on, which gives me an average price there. So let's see if the rest of the trade in profit can get down to that propulsion gap. We will see. So positions I've got on, I'll have a look at those in a sec. See if the DAX is actually continuing. So we have rejected yesterday's high at the moment. So first attempt didn't get through. FTSE's gone. So FTSE's off and out. So looking for a target of high of the week. So that propulsion gap is now filled. Okay, so we are now at exactly the point where the buyers flip short. Yeah. They've been overpowered, so I'd expect a little bit of a pullback and a kick-off up into the highs. Right, come back to that in a minute. So positions I've got on at the moment, Aussie dollar, New Zealand dollar shorts. Obviously, I've just explained those ones. Swiss yen, I have 2 longs on. So second entry taken on this one yesterday. We're totally sideways on it. So first entry on this was here. So basically I was looking for this propulsion move to hold. As soon as I got into it, obviously it just made a new low. Double bottomed, then we had a gap down. We've sat around for 2 days, managed to push up into those highs. I didn't take it off, wasn't quite enough profit for me. I was expecting them to come up to here. They didn't manage it. So we pushed back down, double bottomed. So second entry went in on that yesterday at the double bottom, which is nicely spaced. So averaged in here. So now it gives me an opportunity to exit up at those highs in profit. So that move there will be 108. ADR is 113. So I'm just going to put manual TPs at 125 ADR on both of those. That's where I'm looking to get out. Euro CAD. Have on as well. So got shorts on this one. This went nicely into profit. I was about 100 odd, 120 odd up yesterday. It's really, really sideways at the moment. So I was contemplating taking a partial on it. In fact, now I'm looking at the euro this morning. I'm contemplating taking a partial on it. Not enough money on it now. It's difficult to read this. We are kind of making higher highs, higher lows. We've just put in a lower low. So in theory, this reversal alert here is potentially going to continue back into these propulsion gaps. We have this up here, pound US dollar weekly range just exceeded. We've got this up here potentially that we're going to head for. And then obviously we've got that weekly high. So there's two scenarios that are going to play out on this one. Either this reversal alert is going to cause a new leg down to come and fill that propulsion gap, or we're just going to continue current market structure up into those highs. So that will be my next entry all the way up there. So I'm kind of toying with the idea of just taking a partial and banking a little bit on it. And then obviously if it pushes back up into here, I can add it back on again. But it's just not quite enough money. Difficult choice. Yesterday, it was an easy choice. I should have taken the partial yesterday, but I didn't. Anyway, I've got that on. Euro Swiss. Don't know what to do with it, so I'll leave it. Euro Swiss is just in profit, waiting for it to go to those highs. So ADR target for me on that one is 51, which is somewhere in 3/4 of an ADR today. So hopefully that will go. If this euro pushes today, obviously Euro Swiss is going to hit target and Euro CAD is going to go into drawdown. We've got the CAD numbers this afternoon, haven't we? Might get a move on the CAD this afternoon. US dollar CAD weekly range just hit. Looks like a strong Canadian dollar. No, weak US dollar. So US dollar's coming down. Don't know why that's coming down so hard. No news. Just strength of movement this morning. So Euro Swiss long, Euro Pound. I've got 3 longs on that. This thing's annoying as hell. I've already banked on it. So this entry here was entry number 3. 1, 2, 3. So first one was there. Sorry, second one was there. First one was in here somewhere. Third one down there. So I took that one off on Wednesday at the highs because it looked like we were potentially going to break out and drop back down again. So I took it off. We sat around and then we did exactly that. So I added that one back on again yesterday. So I banked on it. So now I can bank on it a second time. Just keep banking constantly until proven right or wrong. So moving up into propulsion, I'll probably take that one off again. But that is my ultimate target, is coming back up into that propulsion gap. But this is where I was worried about potentially finding some resistance, and that's exactly what happened. So that's why I took that partial there. So I still like it long. Obviously, we've had good news for the pound this morning, although the market doesn't seem to be reacting to it. But yeah, I'm just looking for some kind of pullback up onto this area from this leg down here. I've also got pound US dollar shorts on. Obviously, next entry is about to go in on that one. We're out into new highs on this, aren't we? This propulsion move. Okay, so that pound US dollar has just broken yearly highs after 2 attempts to get through it. I'm going to just hit the sell button right there. The only reason I'm taking a trade with no confirmation signal here, my average was at 175 ADR. I just want to get that average up so that if we come back and test this propulsion gap, I've got an out. Because this dollar is not doing well, and neither is the stock market. So I'm unsure as to whether we are actually going to get some dollar strength coming through. Nothing seems to be going right for Trump at all at the moment. So yeah, I'm just going to keep the average tight on this. So I'm going to space this nice and evenly so that all I'm looking for is some kind of pushback down into this hourly propulsion gap. I'm assuming that if we're going to have a weak dollar, we're not going to get back to these levels, potentially not get back to that level. That's a very big propulsion move, though, that broke that high. So there's a good chance that we will do a 50% retracement new leg up if it goes into a trend. That average move there that I've just done gets my average up above that propulsion gap, which means I can exit in that propulsion gap in profit. So I'm just watching for where I'm looking to get out when the market does turn and making sure that I've got a profitable exit on it. So pound US dollar, obviously that's in drawdown at the moment. Everything else is kind of sitting around. There's nothing in massive drawdown. There's nothing in massive profit. It's just that flip-floppy market at the moment, which is very hard to make money out of because as traders, we need the market to move. That's how we make money. If the market sits there sideways, you don't really get enough movement to bank anything. So situation at the minute. But right, there we go. So that's what I've got on. Blimey. FTSE's collapsed straight back down into opening range. It is pushing up again now. DAX is about to target. 1 minute left on this candle. That's a very strong extended move. So I'm just going to move my partial down to guarantee that I get the partial closed. Just in case. This is obviously just seeing what the FTSE's done. Yeah, there's a high chance the DAX is going to do the same thing. So just going to make sure I get that partial in, $800 on the table. So I just want to take some of that off. 30 seconds. If anybody's got any other pairs they want to look at, let me know. We're going to do a little review of the week in a minute. Just have a look at what's happened this week. I'm going to whiz through all the pairs, see where we are. See if there's any good opportunities to get into anything. We've highlighted a couple this morning. 5 seconds. We'll be banking partial. Okay, so out. Just going to move my stop up just to protect the second half of that. Just in case. We got very odd price action today, look. So we got gaps on the FTSE, look. The FTSE's really gapping, which indicates low liquidity. And low liquidity often means you get big, strong candles and large wicks because the market's hunting for liquidity. It's hunting for prices to get orders filled. So you get these big candles going in while the market's pushing to get orders filled, and then it pulls back to get the other orders filled. And it's just, you're going to get gappy, sort of unclean price action, which is, means you get spread a lot. It's just not a very nice trading environment. So just going to watch what happens here. We are rejecting at the minute. So obviously this is where the sellers have been sitting. We can see that, and they have obviously certainly stepped in there, although that could be profit taking on that leg. So we'll see where we go with this next candle, but it looks to me like we're just reversing. So need this propulsion move to hold today, which is the initial 5-minute opening range. That's our kind of line in the sand. If that breaks, we're going to downside test probably back down into here, which is fine because I will take a short and then get out on the short. 15, 20, 25, 30. So the 30-minute range is in. So there's your 30-minute high-low. So that's what we're looking at for break to continue the morning. So talking about 30-minute highs and lows, that strategy that I just showed you this morning, this one, this is trading exactly that. So this is trading a 30-minute mean reversion. I'll go through this in the member stream on Wednesday in more detail, but what this does is very, very quick, this EA, so it's hard to catch the moves. But what it does is it trades a 30-minute range re-entry. So it uses propulsion moves, so propulsion gaps, to show strong rejection back in the opposite direction. Yeah. So what we're looking for is, we can't trade down here. Let's try the other way. And then we're looking for a retest of the opposite side of the range, or it's going to go and continue like that. Those will be your losing days. Those will be your winning days. So it's the absolute opposite of ORB. If the breakout fails, ORB will stop out. Reverse ORB will profit. Yeah. So it's the same strategy in reverse, but we're playing the 30-minute range, which is the initial TPO, time price opportunity candle in futures. So after that 30-minute range is in, we either play that range for rotation days, or we break out of that range for trend days. Yeah. So this strategy basically is assuming that we're either going to have a rotation day, or we're going to reject and break out in the opposite direction. So there's two things that go in our favor and one thing that doesn't. The thing that doesn't go in our favor is a trend continuation on the initial move. Yeah, so that's where the edge lies. So, but yeah, overall, good little strategy. But I'm just working on optimization of it at the moment. Strike rate's about 40%. So for a mean reversion strategy, it's actually very low. And normally mean reversion strategies would be looking 60, maybe up a bit more than that. So it's actually got quite a low conversion rate, strike rate. But there are lots of permutations on the strategy that will give it an edge. So I'm testing different R ratios and all sorts of stuff with it. And more importantly, different trailing stop mechanisms with it. Because it's a mean reversion strategy, it's just reducing that initial risk as fast as you can. Like all, it's going to go through drawdown. Drawdown I found is somewhere between 8 to 15%. Return is somewhere between 10 to 50%. So it's got a 1-to-1 return on drawdown ratio and above, which is what we want. Can't ask for more than that, can you? So yeah, so it's a good little strategy. I'm developing it on the DAX. I haven't tested it on anything else yet, so there's a long way to go. But if it works on the DAX, which is a bit slower, obviously, I expect we'll get good results out of things like the NASDAQ. So anyway, work in progress. Okay, so inside bar on the DAX. And continuation by the looks of things. DAX on fire today. Just going to change my trailer on the DAX. Start trailing that at 20% of ADR. So I look a little bit more in. FTSE really struggling this morning. Come back to that in a minute, but that's not looking anywhere near as strong, the FTSE today. I guess those retail numbers holding the UK stocks back this morning. Right. Let's have a look at the rest of what happened this week. Catch up on chat. What size of spacing will you use on cable? I use 0.75 and everything. If you change your spacing on different pairs, you're curve fitting. If you're curve fitting, it won't work. So 0.75 is what I use. If you want to use 0.5, use 0.5, but do not change it on each individual pair. You're just curve fitting to back-tested data, which has got nothing to do with the future. Prove the strategy on variables that work on everything. If they don't work on everything, you're going to curve fit. So, but I use 0.75, but if you want to use 0.5, that's fine. Obviously, you're going to get into drawdown. You're going to have a third more drawdown. Just bear that in mind, yes. Do your testing. Whenever you're testing anything, always, if you want to learn more about system parameter permutation testing, become a member and go into the member streams. Yeah, we've got a whole week of it down here. Back testing, robustness testing, system parameter permutation testing. Yeah, it's the most, if you haven't done this, you shouldn't be live trading anything. Yeah, because until you've proved to yourself you've got a robust strategy, you shouldn't be executing it. Yeah. So if you run a back test over a period of 3 years on any instrument with a 0.5 spacing of ADR and a 0.75 spacing of ADR, yeah. Why do I always try and write ARD? This will tell you the difference in drawdown, yeah. So you will be taking about a 30% more drawdown on your account using that setting compared to that setting. Yeah. When you go up to 1 ADR and above, you're going to find that you will get a lot less drawdown on the account, but you will have a lot less trades because you will be in your trades for longer because your average will be further away, making the exits more difficult to achieve. So you will be in trades for longer. But in squeezes, you will be a lot more comfortable. 0.5 ADR, if you get a multiple squeeze, you will lose your account. Unless you're doing drawdown control, which is fine. The sweet spot I've always found is 3/4 of an ADR in between the two. So it gives you that kind of So that's a great example there today. Look on that pound US dollar. So I've just taken that trade on the pound US dollar, which is just over 3/4 of an ADR apart. But look at the spacing on my trades. Yeah, there and there. If you've been spacing these at half an ADR, which is 50. Right, so that's 50. Yeah, so if you'd have been spacing at half an ADR, right, where I've got 4 positions on, you would have 5 positions on. Because you've got 5 positions on, your drawdown is going to be roughly 20% or more higher than my drawdown. Yeah, so where I'm sitting in 1% at the moment, you'll be sitting in somewhere in the region of 1.2 to 1.3%. Yeah, so it exponentially increases. Spacing and sizing are the 2 things that kill position traders. Yeah, getting in too big with your initial trade, meaning that you escalate your lot size far too fast, and spacing trades too close together. Not saying it's right or wrong, just you need to be aware of what the impact of it is. Yeah, so a lot of the time, half an ADR will work out way better than 3/4 of an ADR. Don't get me wrong, you will get out of your trades much faster with much more profit. But when you don't, you will get hurt exponentially more. And it's about survival trading. Yeah, capital preservation is rule number 1. If you don't have capital, you can't trade. If you can't trade, you can't earn money. Yeah. So although it's tempting to use lower time frames, like trading on the 15-minute time frame and spacing 1/4 of an ADR apart, it will absolutely kill it. And you'll be like, this is the holy grail. And then it will just destroy your account because that spacing is too close together. And when something takes off parabolic for 3 weeks or 4 weeks, you will be dead by the time you get a third of the way into that move. So spacing is absolutely key. But it all depends on the market conditions. If you're going into rotational markets like we've got at the moment, half an ADR is by far the best thing to use. But we're in a rotational market at the moment. Where are we going to be in the next 3 months? Are we going to be parabolic? Are we going to be Trump destroying the planet? Are we going to be sitting sideways because we're scared? Are inflation figures and CPI numbers, in interest rates going to go up again? Are we going to have another pandemic? Yeah, you've got to basically future-proof yourself against what's coming. And because we don't know it, you have to go on the err on the side of caution. So the more cautious you are, the more you'll be comfortable. Doesn't mean it's the right thing to do, though. If we knew the right thing to do, we'd do it. That's why people struggle, because we don't know what the right thing to do is, because we ain't got a crystal ball. Wish we did. Robert, I want to enter Aussie dollar CAD because you talked about it. Don't enter because I've talked about it. So I'm going to talk about gold now. Are you going to enter that as well? Aussie dollar CAD, yeah. Sorry, it's Friday. Sarcastic. But there's no RSI extension. Do you think it's safe to enter based on price action alone? Yeah, of course. RSI is just a signal. Well, it's not a signal, it's a condition. RSI is a condition indicator. So it tells you the condition of the market. The condition of the market is stretched, or the condition of the market is not stretched. Exactly the same as a Bollinger Band tells you whether the market is stretched. When you get outside of a Bollinger Band, it's stretched. When you're not outside of a Bollinger Band, it's not stretched. Mean reversion traders need stretched market conditions to revert to the mean. So although that isn't stretched on the hourly time frame, it is a support resistance bounce with confirmed price action. The more we talk about this, the more you're missing it. But that is a beautiful support resistance bounce. Yeah, every supply and demand trader on the planet now is long on this. Whether they're right or wrong is up to them, but is up to the market. But If it comes down, you've got a beautiful support, 3/4 of an ADR. In fact, it's more than that. It's about an ADR away. So if you were to get in somewhere around here, you're 103 away from that low, which is roughly 125 ADR or something, isn't it? So you could get 2 trades in there. So if you got in there and it broke down, you could take a second in propulsion and assume that that high is going to hold them up and they're not going to put a lower low in. If that doesn't work out, you've got a third entry at low. Your average is going to be there and you'll pull back on that leg. Or it's just going to go straight up to target. Always plan for, if this trade works, where am I getting out? If this trade doesn't work out, where am I getting in? Again, that's all you've got to do. Because this is, I keep saying this, it's my mantra. The market is going to go up or down through time. That's it. That's all it does. It either goes up or it goes down. So if it's going up, where's it going? If it's going down, where's it going? That's your plan. Don't overcomplicate it. If that hasn't signaled, that hasn't signaled. But if you see another reason to get in, take it. Just because that, if you wait, so there was no RSI signal to go short there. Look, it went short. There was no RSI signal to go short there. There was no RSI signal to go long there. There wasn't a short signal there. There was a short signal there. RSI is just a condition indicator. It isn't the be all and end all. Take this off your chart. Don't use it at all. And just do support resistance bounces. It's the same thing. If price is pushed hard in one direction and it's bouncing at support, assume that it's going to pull back on that leg, or it's going to invalidate that leg, or it's not. And if it's not, where's it going next? You don't need RSI for additional entries. I just give people in the boot camp a system, a ready-made out the box. Here you go. Wait for that to get there. Wait for this to happen, and then do that. You can use any indicator you like. You don't need to use indicators. You can use pure price action. You can use whatever you want to get into the market. But position trading is about entering the market and then waiting to see what the market does. If the market goes your way, you take the money. If the market doesn't go your way, you change your price. How you get in has got nothing to do with making money. How you get in is how you press the buy or the sell button. What happens after the buy or the sell button is why you make the money. So if you don't want to use the RSI, don't use the RSI. Doesn't make any difference. You can take it off your chart completely. Although you might be floundering around going, I don't know what to do now. You've got to have a system. Yeah, this is all I give people is systems. None of the systems are accurate because you can't have something that's accurate because it's different. Every time you press a button, that market will do something different. Right now, this could jump straight into this previous weekly level and this propulsion move to the downside and bounce back down again. So it's going to go like that. If that's the case, you've got a plan. However, if that reversal of that double weekly low is going to make it do that, you've got a plan. As long as you've got a plan for either a profitable exit or a scaling to a profitable exit in the future, what have you got at the end of it? 2 profitable exits. How you get in has got nothing to do with it. You've got to have a system though. So in my experience, it's better to wait for the market to be really extended. And I like this as an extension tool. And it's good to wait for the market participants that are going in your direction to be going in your direction, which is why I like the reversal indicator, because this tells me that the buyers are on board. This tells me that the sellers have been on board and are not on board anymore. So if I want to buy it, I want them to have been exhausted and I want these to be taking control. But in the next hour, someone could come in and say, can you convert 25 million Canadian dollars into Australian dollars for me, please? And the bank will execute that order for them. I cannot help what's going to happen in the future. So how I get in is irrelevant because it's down to the guys queuing up to place orders in these 2 currencies at all the banks and institutions around the world as to where this goes next. You haven't got any control over that. So you scale in, you use risk, and that's it. I'm poo-pooing my own system, but it's my system is not a system. It's a methodology. You can get in any way you like. This is why I introduced the buttons into the position trader EA. Just hit a button, hit that or that now, and it will either go your way or it won't. Yeah, I don't know what the best button to push is. I would be pushing the long button, but equally, someone could press the short button right now and be also correct. DAX is pulling back. So we've got 2 propulsion areas at the moment to hold up on the DAX. All the previous propulsion gaps are complete. There we go. So everything there is grey. Done. So looking for pushes out of here. So my trailing stop is likely to get triggered. 50% retracement on that, but I'm not going to take a risk of this being a double top rejection and coming back down here. So I will partial close that. FTSE stuck. Properly stuck. In the middle of GAC, getting arse kicked. Oh, that's a good trade term. I've not heard that one, Franco. In the middle of a GAC trade. I like that one. That's a great name for a strategy. Trouble is, it's not a strategy you could sell, is it? What's the strategy? GAC. What's that stand for? Getting arse kicked. I'll move on to the next one if that's all right. Interesting, your new mean reversion strategy, worth considering the overnight highs and pivots. You could overcomplicate it if you want to, but I'm not. This is the thing, WDS, isn't it, right? You can consider anything. You could consider pivot points. You could consider overnight highs and lows. You could consider propulsion gaps. You can consider the 30-minute range. You can consider the 15-minute range. They will all work. They will all fail. So what you've got to do is press a button on a set of rules and wait for the edge to play out. If there's an edge in pivots, use pivots. If there's an edge in highs and lows, use highs and lows. If there's an edge in the 30-minute range, use the 30-minute range. If you find an edge, trade it. What the edge is, totally irrelevant. Goes up, goes down. That's all it does. So I can create you, and I've got about 1 billion EAs that I've created. They all have an edge, but they all do roughly the same thing, which is basically wait for the market to do something, press a button, apply risk reward to it, and then wait for the market to play that edge out. That edge will either pass or fail with somewhere between a 30 to a 60% strike rate. A million ways to do it. New strat looks interesting. Cool. Morning, Barry. Testing is fun, actually. It is fun. It's my life. You can sunk in a bit at first. How will it work with that, or what will happen if I change this setting? Yeah. So strategy development is you basically, as a trader, you are basically a data analyst. That's your job. Your job is to analyze historical price patterns and find repeating patterns that create an edge. An edge in the market is basically a way of entering and exiting with a profit. That's all your job is. So you can go and hunt, and this is the problem. You hunt YouTube for your life, or forums everywhere. You go everywhere trying to find a system or a strategy that works. But you have to be able to prove it to yourself. So if you find someone trading a system or a strategy, I found a great one the other day on YouTube who went, I've got this new strategy, I've been trading it for years. It's based on ICT terminology, and this is what it does. And he went through the last 5 days and went, I do this here, I do this here, I do this here. As you can see, for the last 5 days, it's worked 100% of the time. Everyone's like, oh, wow, 40,000 views that video's got. I built an EA for it, back tested it. The week before, it lost every single trade. So he picked 5 a week, basically, where there was 5 trades in a row that worked, and went, here you go, go and buy my course, and I'll show you how to do it. I was like, that's all YouTube is full of. As soon as you build the model and you test the model, you will find the model doesn't work. That's why these guys are on YouTube with 40,000 views. He's just earned $100 and something from that video. Well done. That's all he earns. Doesn't trade it, does he? So, this is what your job is. Your job is to find stuff, test it, weed out the shit, and focus on the stuff that's left. And you will find that there are 2 or 3 things that you can do in the market that make money. You just trade those. But it doesn't matter whether you use a CCI, a MACD, an RSI, whether you use price action, whether you use support resistance. It doesn't matter what you do. You apply risk. And as long as you've got a risk mechanism that can generate profit, that's all you need. If you find a strategy out there with a 50% strike rate that has a 1.5 R over a period of 5 years, you've cracked it, because that's all you can do. You're not going to get anything better than that. I've done 1,000 tests. The maximum return on drawdown I've ever achieved is sort of 6%, 6R return on drawdown. I've never found a strategy higher than that is consistent. Once you've found it, use it, because what you will do is you will just replicate that with different indicators over and over again. So you go, I found this brilliant CCI strategy. It's the same as the RSI one. I found this brilliant MACD strategy. It's the same as the CCI one. I found this brilliant Bollinger Band strategy. It's the same as the MACD one, because all of those condition indicators tell you that the market's moved in one direction. So what are you doing? You're trading a mean reversion strategy. There's 1,000 of them out there. I've got 2, ADR, RSI. If you want to include the weekly range extensions and monthly extensions, they're all the same thing. That's mean reversion. Same strategy. This EA that I've built is brilliant. It's a mean reversion strategy. I've got another mean reversion strategy I'm trading now, but this one is a 5-minute mean reversion strategy for indices. I've got a ADR strategy for FX, which also works on indices sometimes, but not as much. They're just mean reversion. There's mean reversion, there's trend, and there's breakout. That's the only thing there is. And support and resistance, obviously, but all support and resistance is the same thing again, isn't it? Yeah. So what we're trading here, a support bounce. So what is this? It's a mean reversion strategy. Why is it mean reversion strategy? Because for the market to get to support, it has to have moved. So you're reverting the mean. Mean reversion. Yeah. Supply and demand. So I'll make a video on supply and demand and make a brand new EA on supply and demand, and I'll sell that. What am I doing? Selling another mean reversion strategy. We've got loads of them already. Position trader EA can trade 3 mean reversion strategies out of the box. You don't need another one. You know what I mean? This is why that video came up. Yeah, I saw it go into Discord from my automated system, but about stop buying courses. That video I explain pretty much exactly that. All you're doing every time you buy a course or watch a new video is you're seeing a variation on something you already know. The market goes up and down and it bounces. Press a button. But testing is what is going to tell you whether it's got an edge or not. And if it has, you know, if it plays out, just execute it. And then just leave it, focus on it. I hate being in drawdown for anything more than a few days. Position trading's not going to be for you. You will be in drawdown for a lot longer than a few days. I mean, you look at some of the trades I've got on at the moment. Euro pound. I started that on the 8th of May. Yeah. If this just grinds like this, I'm going to be in this in June. But I prefer to take a hit earlier on in entries and accept that will not produce anything like optimal results. Yeah, it's up to you. Again, there's no, you know, somebody contacted me in MQL5 overnight and said, I'm really struggling to optimize your position trader EA. I can't find the right settings for any forex pair. So I said, well, there's loads of set files on Discord. So just use those. And he was like, yeah, but they don't produce the results I want. So the problem isn't that it doesn't make money. It's not making enough. What do you want? Someone turned around to you and said, you can stick this on a chart, right, and go away and come back and it will have made money. Oh, it doesn't make me enough. Can't help. So he's asked me to basically say, I'll pay you to find me better results. I was like, all right, fine. I will curve fit it. I'll stick it in the optimizer. I will curve fit it for you so that it produces the absolute perfect result that you want. And I'll give you that set file. And I will charge you $500 for the privilege. But as soon as you put that on your chart, it won't do what it did in that test, because the market we're going to have is not going to be the market we've had, because there's no 2 days in trading that are the same. You can't convince people sometimes that you found the Holy Grail already. If you test it for 2 years and it comes out and it hasn't lost money, done. I had to learn spacing for my trades. It was very valuable for me to me being profitable. Yeah. Spacing is key. You know, this is the people that I see contacting me on Discord and Telegram who are in trouble. when I look at their trades, they're always like, there's one there, 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 there's one there. They're in 6 positions and it's moved 1 ADR. You're dead. Honestly, this is what it's all about. It's patience. It's a patience system. If you can't be in drawdown for more than a few days because it worries you, this is not the right strategy, because this is a strategy. It's a long-term swing strategy. It will either work within days or it won't. If it doesn't, you have to be prepared to sit in it. But there's things you can do along the way. Yeah. So looking at my Euro CAD, so take partials. So I didn't get the opportunity to do it. I should have done it yesterday. But so when you're in something like this, where you're in the 3 or 4 positions and you've been in the position for 4 or 5 days and it's annoying you, take some money off. Yeah. So when the market starts to go your way, take some profit, because psychologically it puts profit in the bank, which is a big tick. Your average will move down, but price has already moved down. So you're not actually getting into too much of a worse position, are you? And then maybe do a little bit of drawdown control on one of the positions to, again, tick that box of, I'm doing it right, I'm doing the job. And then it'll either push up and you'll get that trade on again, which means you get a second opportunity at making money, or it will carry on down and it will get you out of the trade and you'll go, oh, I wish I'd have left that on because I'd have made more money. But worst case scenario, you're just ticking psychological boxes, basically. At the moment, I'm looking at this week and I'm thinking, I haven't banked anything. I have one. But that doesn't bother me, because I know that suddenly the market's going to move. This whole lot will go into profit in one go, and I'll stick in a 1.6 or 2% day. But it's not about needing to produce regular income. It's about constant income that is over time. You can't say, I want to earn X a week with this type of strategy. It's the type of strategy you're just going to earn X a year, somewhere between 50 to 150% return. That's what you're going to get. But it's not going to be pretty for a lot of it, because the whole purpose of position trading is we sit in drawdown, waiting for the market to go our direction. We're not getting it right every day. This strategy is totally the opposite. This strategy is instant gratification. I'm paid within 2 hours every day. Done. I'm either lost within 2 hours or I'm paid within 2 hours. By 6 o'clock in the evening, I know exactly what I'm earning. You can't do that with position trading. Morning, Church. Hardest thing to understand, time factor. Everyone wants massive gains within 15 minutes. Yeah, but this is the thing. You can get that here. Look, this trade here lasted 5, 10, 15, 20, 25, 30 minutes. In, out, gratified. 15 minutes is a bit tight. But I can walk away now. I can just go, screw it. I'm going out for the morning. Shut that, and walk away with $1,000. I'm not, because I'm 1,300 down from yesterday. So I'd like this morning's session, ideally, to recover that, and then I'll use this afternoon session to aim for profit. But that's not down to me, is it? That's up to the market. Because of the distance cable has already moved, I should be looking at that, shouldn't I, while I'm talking about it? Because the distance cable has already moved, would you not consider setting your next entry at less than 0.75? No, why? What makes you think, because it's gone that far, that now it's going to turn round? Yeah, if you start, I mean, you can, if you want to. So it's very easy to do if you want to do that, right? So if you're in 4 positions and you think, right, this is definitely getting to a point where it's going to turn now, open up your EA, change that to 0.5, and then hit OK. And now the EA will start scaling in half an ADR apart. All I would say to you is, what if this continues for the next 2 weeks? And now you're getting in here, 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 here. 1, 2, 3, 4, 5, 6. You've got 6 positions on where you would normally have, so you'd have 10 total up here. I would have somewhere around about 6, maybe 7. Yeah. So again, your drawdown, at least 30% higher than my drawdown, if not more. Mean reversion, right? So, you know, I say this all the time. The market will always mean revert at some point. You don't know when it's going to mean revert, though. So if you look at the pound US dollar here, right? Since the Trump move, we've had a push and a mean reversion, a push and a mean reversion, a push and a mean reversion, a push, a pull and a mean reversion. That mean reverted 50% of that move. We've pushed up, flagged, pushed up, accumulated, pushed up, flagged, push up, accumulate. Yeah. So if this is now going to be the way we move, we're only 1 week into this move. This could be a 3-week move. Go up to the weekly charts. Have a look at what the price can do at points. Yeah. 1, 2, let's call it 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. That's 2 months where you did not get a pullback. So if you're scaling in 3/4 an ADR for 2 months, or you're scaling in half an ADR for 2 months, that can be the difference between you being in 8 to 10% drawdown on that one individual instrument on a squeeze, or 30% drawdown, maybe, I don't know. But you're going to be uncomfortable fast. Look at the size of that move. Look at the size of that. Yes, it did pull back. So 1, 2, 3, 4, 5, 6 weeks, you got your pullback on it. This one here, 1 week, 2 week, pullback was there. So that's probably a 38 retracement. At a push, that's a break even. And now you're pushing again. Yeah. So just because it's going hard doesn't mean it's coming back. Look at the size of that move. Yes, we retraced half of it. Look at the size of that move. Yes, we retraced half of it. Look at the size of that. That's a V-shaped recovery, so that doesn't really count. But pullback, pullback, reverse, pullback. It will do it. But if it doesn't do it for 6 weeks, you've got to be alive in 6 weeks. There's no point in my experience of getting aggressive. You're better off, if you want to get aggressive, the best way to be aggressive is use aggressive drawdown control. So in the EA, it's all built in, aggressive drawdown control. If you set that to true, yeah, get in aggressive, but use a stop loss. So right now, if I want to get in, I would rather get in, I'm in 4 trades in a position, I'm not getting aggressive. But if it gets up to here, maybe I'll be thinking, right, I'll think about taking an aggressive drawdown control position. That will be a trade which is risking somewhere around about 0.5 to 1% of my account at a point where I'm going to want to be overextended. I want to be 75, 80% on the RSI at least. Yeah, because the chances of that are much, much higher, above 80%. And I'd ideally like a support resistance level or some kind of propulsion move at that extension, which is going to give me that opportunity to really get a big size on, which will bring my average right up close, which means I can get out of the vast majority of this position, rather than scale in a lot tighter, meaning that my average creeps up in the hope that we get a 38% retracement. If we don't, and we get an accumulation break, or we get a flag break, what you've just done is add a huge amount of size to your position. And as soon as that goes 1 ADR against you, that lot is going to hurt badly. Yeah, so just spacing is the most important thing. Keeping it, keeping your job, all you're doing with spacing is you're controlling the average price. This line is being controlled. So if I add another trade in, I'll do it now, I'll show you. If I add another trade in now, that is going to jump up to probably 1 ADR, somewhere around about there. There you go. Yeah. So what I've just done is given myself and out. Much easier. So it's got to move quarter of an ADR less now for me to exit this position. So a news event comes out on the US dollar or a news event comes out on the pound, it goes bang. I'm out. Whereas I wasn't out with that. So now if I space another one there and another one there, my average is going to be up here. But if this now, once I've done that, sits around and accumulates, and then it pops on news, don't forget we've got Trump in charge now. He can pop that dollar whenever he wants. If he pops it in that direction, I'm going to be in so much pain. So just keep it. You're going to have to just wait longer for that leg to play out. If you're getting closer, you won't have to wait as long. But if you get caught on the wrong side of a squeeze, it will just be too much for you to bear. I don't know what to do with that trade now. It's literally gone against me as soon as I press the button, isn't it? I'm just going to stick a stop loss on that. I'll tell you what I'll do. I'll take a $30 hit for you, just to, because it's a good session to prove the point. Or I won't, and I'll trail that down. I'm just going to stick a trailing stop on that. Hang on. I'm going to stick a 20 pips trailer on that. So what it's going to do is basically, as it pushes back down, if it comes to test that, because we're just about to put a propulsion gap in, so I will get that trailed so that it doesn't hurt my position. ORB, instant gratification or instant pain. Yeah. But this is trading, isn't it? Yeah. Well, if you don't want instant gratification or instant pain, this is the wrong job. Because that's all there is. There's instant gratification, instant pain. Or you can have long-winded pain by swing trading. Or long-winded pleasure with swing trading. Psychologically, some traders are good at 5-minute charts, 1-minute charts, tick charts, and other traders are useless at it. Those traders that are good on short time frames at scalps in and out of the market within minutes and within the hour are going to be useless at swing trading because they won't have the patience. So you need to try everything. When you're trading, most traders want the instant gratification. I mean, no one on the planet is going to turn around and go, I'd rather wait to be paid in 6 months' time than 6 minutes' time. No one on the planet has ever turned around and said, I don't want to be paid fast. Yeah. So everybody's in that boat. The trouble is 95% of people can't do that boat. So they are better suited to longer term trading, either day trading on 15-minute charts, hourly charts, or they're swing trading on hourly, 4-hourly, daily. Most people are suited to that because you have to wait longer, but you will be right more often because down here, it's just algorithmic chop. So you've got to be super, super, super disciplined. You need to try both. You need to trade 1-minute tick chart, 5-minute, try indices, see how you get on. Try trading 15-minute charts on indices. Try trading the hourly charts on indices and go for bounce plays that last for 2 to 3 hours and you're out by the end of the day. So day trading. If that doesn't suit you, best vehicle out there is forex because you've got 28 pairs there that move at random over long periods of time. Yes, you're going to have to wait to get paid, but you've got to try everything. Everybody's going to have a different skill set that they don't know about yet, and everybody's going to be able to learn different skills at different rates. So you've got to try everything. I've tried stocks, I've tried futures, I've tried FX, I've tried everything out there, and I was good at it all, but not great at any of it. So I decided to dump stocks because it was overcomplicated. There was too much out there. You're talking tens of thousands of possible things to trade. So you need scanners, you need strategies for scanners, you need all sorts of extra skill sets involved. Can be asked. So I settled on forex and indices. Indices are really simple. They move at a certain time of the day. FX moves all the time. So I've got something I can trade slow and I've got something I can trade fast. But honing your skill that's what it's all about. Finding your skill. So your journey in trading is always going to be about trying everything, finding what works for you, and doing that thing over and over and over again. Just rinse, repeat, rinse, repeat. To do that, you've got to do system testing. And if you can't code, you need to do it manually. And just find something that works consistently enough, but accept that it's going to be, the journey is going to have that. There's no journey that goes like that. Usually it ends like that if it does do that. So your journey is going to be made up of weeks and months of nothing, weeks and months of amazing stuff, agonizing pain at times, frustration, pleasure. That's a P&L. Yeah, never, ever does it go like that all the time. You're going to have, what's that, 1, 2, 3, 4, 5, 6 trades there in a row, all losers. Imagine for 6 days, this strategy only takes 1 trade a day, sometimes 2. But imagine for 6 days in a row, yeah, an entire week, and you go, that was the worst week ever. I hate that week. Monday, loser. That's what you have to get through, because that is happening all the time. It's just the way it is. You've got this, and this is the hardest bit about trading, is sitting through the crap. Look at my P&L. Looks lovely. Yesterday it was ruined. There's very few weeks where that is green. All green. Yeah, there's very few months where that is all green. There's losing weeks in there, always. But it's about finding the thing that repeats that you. I'm going to close that. I'm not going to close it. I'm going to break even it. I don't trust this DAX, this FTSE this morning at all. We've literally had the 20-minute candle break to the upside, and since then we've gone absolutely nowhere. This, I don't think, is able to get out today. So I'm going to break that even. I'm not going to take a loss on it. I'm going to lock a bit more in on the FTSE just to compensate, on the DAX to compensate. Did I say DAX or FTSE then? Yeah, that's the FTSE, that's the DAX. So I'm just going to lock that second part in. This thing's struggling this morning, so I'm going to be a bit cautious. I bought Trump coin, more of a souvenir. A Trump coin. Has he got a coin now? I didn't even know that. I didn't know he had a coin. You should have thousands watching, following. The problem is position trading works. Is simple to understand, but very mentally challenging to do. Yeah. Again, it's not for everybody. Exactly. This is not for everybody. There's 48 people in here today. I never get more than 60 people in a stream. Rarely. I've had times in the past where there might have been 100, but people aren't interested in making money over a long period of time. They're interested in making money today. There you go. So stopped out on DAX. I'm going to cancel. I cancel the pending off. I'm going to watch this. That pending. I'll leave it in place for the moment, but I'm just going to watch what the movement of the DAX is today. If this collapses really fast for the next 20 minutes or so, I'll probably take that one off, because it's likely to do that, isn't it? Which is literally just going to get you in and get you stopped straight out. If it sort of flip-flops around and moves back inside the range, I might leave that on and see if we can get a range break out at the bottom. I mean, it might go flying up to the upside, but out the FTSE as well. So flat 720 on the morning. What was I talking about? Yeah, so people haven't got the, people don't want to sit in trades forever, do they? This is the thing. This trade here. So if this trade works out, what do I want? 51. Yeah. So if we get up to these highs, basically this trade is done. So I entered this trade on Wednesday, and I've been sitting in it for a day, and now day 2, it looks like it's working out. It's going to get up to there, and then it's going to do that. And then I'm going to sit in it on Monday and Tuesday. It's going to come down, and then Wednesday and next Thursday, it's going to get there. So I've been sitting in this for a week to earn 0.25% gain on my account. This is the bit that no one's interested in. This is why there's 50 people in here, because what's the point in sitting there for a week just to earn 0.25%? So they'll go off and they'll lose 5% in a day trying to trade the stock indices. They'll spend $1,500 on proper valuations, losing 5% a day. And I'll be sitting here just banking 0.25% every week on every instrument, building up a pot, which will turn into somewhere between 5 to 15% a month. Because I don't need instant gratification. I need money. And this is not how you do it. When you place a stop loss in the market, you will get stopped out. That will cause your trading habits to just be destroyed 95% of the time, which means you will never make money in the market. If you just sit there and wait for the market to move, adjust your price to a level that is more suitable for market movement, you will win. But you're not going to win 5, 10, 15% a trade, which is what people want. They want to get in. The guy that I was watching, I said about, who had 40,000 views in 24, 48 hours on that video about the strategy that had 5 wins in a row. Yeah. I think it was $11,500 made in 5 days. That's the shiny bell that everyone wants, isn't it? But I built that model and proved that it lost 16 grand the week before. But the shiny, everyone's like magpies, aren't they? They see something shiny and they fly towards it, which I totally understand, But I show everybody something really shiny here and something really shiny here, but they're not interested in that for some reason. I don't know. Compared to stop loss trading, I don't think it's that mentally challenging. No. So this is what I'm talking about, Robert. It's the psychology. If you don't find it mentally challenging, that's great. This is for you. Other people contact me in Discord and Telegram and are like, I've been in this trade for 4 weeks now. It hasn't gone anywhere. Have you lost any money? No, but I'm not making any money. Yeah, it's not for you then, is it? If you're panicking about it, or I've got other people that contact me and say, I've got 3 trades on this. I've been in it for 4 days now. What do I do? You sit there and you wait. But I don't know what to do. You sit there and you wait. And if it goes down, you add some more in. If it goes up, you can take some off. But when do I do it? There's too many questions. It's not for you, is it? Yeah. This is why I say you've got to try everything. You try everything. What clicks is what's right. Because there's a billion ways to press a binary button of buy and sell. But the one that is right for you, you have to discover. So you try it. I can explain how the markets work, why they work, what they do over and over and over and over again. You have to find something that you can batten onto that movement to extract money out of it. And that either will be using a stop loss on very low time frames or not. And for me, the not is much easier, but nowhere near as rewarding. So if you do both, you have one strategy that works, which is very restricted, that only does one thing over and over again. And some days it doesn't trade, but you can place big money on it. And then something else that you can make consistent long-term lower profit from. You've got the best of both worlds. And that's the ideal, I think, in trading, is having multiple strategies that you can use to extract money in different ways. Because it doesn't matter what the market does. If the market goes explosive and parabolic, the position trading accounts are going to go into drawdown. But the stock indices are going to fly through the roof. The ORB is going to shed tons of cash. But because ORB works with higher risk more times, and it takes a lot less trades, that when it works will bank a lot more than the position trading account will lose. So if I go into drawdown by 5 or 6 or 10 grand even on the position trading account, the ORB will probably be banking 3 to 5k a week. So Peter pays Paul. Yeah, so when they both work, Quid's in it. To me, you don't get paid weekly, daily, monthly. You get paid when the market pays you. It's a long-term thing. You have to have enough money in the bank to be able to survive the months where you don't make any money. If the P&L is negative, I can't pay the mortgage. Yeah, out of that P&L. But the next month's P&L will recoup this month's loss and more. I mean, it's not a loss this month, but you know what I mean. So this 10. Let's say, for example, today we put in a $2,000 day. That brings us up to sort of 7 on the month so far. And next week we do 1,500. Yeah, so up 8.5. That can be withdrawn, but it won't all be spent. It'll be put in the bank in case next month is a down month, because the rest of this month has to pay the mortgage. So it's up, down. In fact, my mortgage is going to drop soon because I'm moving house. So that's even better. Sorry, bear with me a sec. Why does it never work when you hit the voicemail button the first time? WDS, Leah's our secret weapon. That's what makes a good trader. You spent 5 minutes discussing why not to reduce spacing, and then you add a lot short. Yeah. The only reason I did that was to show you what happens. Yeah, I'm not. This trade is not. This trade is not a trade I'm taking for any reason than to just show you what, when you place trades close together, the outcome is your average gets closer to price. Yeah. So what you're doing, and this is what I'm demonstrating with this. Obviously not properly, because that's not something I would normally do. I've done it as a demonstration process, and I don't mind losing $30 to show you something, because it doesn't matter at the end of the day. But what it's doing is it's getting your average closer. So if you space your trades closer together, this average line will be much closer to price than if you space them further away, meaning that you have faster exit. Faster exit is faster gratification. Faster gratification, long term, causes massive pain. Yeah. So you're better off having this average further away. Yeah. And being in it longer, because you can always exit a partial and do drawdown control. Exactly what I've done on the Aussie New Zealand. So you've always got the option when the market moves in your direction, yeah, to take it off. Take that one off. I'm still in the trade. The trade started here. I'm still in it short, but I've taken that off. I've taken that off. I've done partial drawdown control on that to keep the average lower and keep that position size smaller. I could have done some more drawdown control. I decided not to, though, because I've already banked some on it and we hit a monthly high. Yeah. So I'm assuming that monthly high is going to hold and the trade's going to work out. If it doesn't, I'll add it on again. But if I put them too close together, like here and here and here and here and here and here, I've now got 6 trades on where I've got 4. That's 50% more trades. That's 50% more drawdown. That's 50% more pain. You will get the same reward, because as soon as that gets back into profit, you will panic and you will just take it off and go, I survived. I made 0.5%. You could have made 5.5%, but you won't. You'll just take it off. So if you space further apart and you're in the trade for longer, you will let the trade play out longer as well. It's just a psychological thing. Kind of get more trained into patience with wider spacing. Looks like the SIH works better if you turn off the pre-market range. Test that over 5 years before you say that. But, well, no, I mean, you said it. But test over 5 years before you do anything with it. Yeah, this is SIH this month so far, 14%. This is trading pre-market. Yeah. So check. I don't know what it would have done. So go back and do a test, right? This is SIH trading my standard pre-market. What is this trading? This is trading. 10:05. So yeah, I mean, this is trading the pre-market. Obviously, this is dynamic, so it will look for a range pre-market. But if it doesn't find the pre-market, so this one's taken the 5-minute ORB. This one today has taken the pre-market. This one's already at 4R. This one is only at 1R. So I disagree. That one's done 4R. The one that hasn't taken the pre-market hasn't got as far. Check. Test. If they both work and you prefer the other one because it makes a little bit more money or it's got a little bit less drawdown, trade that one. There's no right or wrong. It will either break or it won't. So the pre-market will either work or it won't. The 5-minute will either work or it won't. The 15-minute will either work or it won't. Yeah, they all work and they all fail. I should be transparent. I took the cable trade earlier, so I've been talking my book. I'm trading it more traditionally today with flexible entries, but with a maximum 1% loss. I have always found that the DAX will retrace back to the opening point. Morning, Rajiv. Have I ever created a pound averaging EA? I don't know what that is. Yeah, so you mean a pound averaging EA? What do you mean by that? Position trader EA is an averaging EA. So position trader EA, yeah? You mean DCA, dollar cost averaging, which is basic position trading. That's what this does. If you want to do this, yeah, if you want to trade the position trader EA on the 5-minute time frame or the 15-minute time frame using RSI, ADR 2%. Go aggressive. 0.3. Single trade target 0.5. Multi-trade target 0.5. Now exit at 0.5 ADR. Drawdown control off. Aggressive off. Mean reversion. RSI. We use the 14 current time frame. And we'll use a 70-30 standard. Close above. Not using ADRs. Yeah, so this is basically going to trade on the 5-minute time frame, and it's just going to take RSI extensions on the 5-minute time frame. I think this is what you're saying. This is a standard dollar cost averaging, but on a low time frame. Yeah, so there's an RSI entry. Target. RSI, target. Long, second long, target. Long, second long, target. Short, target. Short target, long target, short target, long target. Short target. Long target. I'm waiting for it to get into trouble. Long target. Long target. Short target. Short target. Isn't it fun when you want it to prove you a point by going wrong, and I'm going to show you why this isn't a good idea. Just prints money. Not moving, basically. We're sideways market. So why are we not taking any trades now? There's no RSI extensions. Look, literally, there's no RSI extensions. There we go. Long target, short target, long target, short target. Bloody hell, this thing's absolute beast. Short target, long. Here we go. Right, now we're getting into trouble. Yeah, 1, 2, 3, 4, 5 out within 24 hours. That's not really a problem, is it? Short target. Short. Target, long target. Long target, short target. I'm going to start using other words beginning with S in a minute. Anybody want to trade a prop account? Short, long. By the way, this is the Australian dollar CAD. If you want to go and test this yourself. 5 minutes. Short. Target, long. Out. Anyway, so I think this is what you mean, Rajiv, isn't it? Yes, you can do it with a position trader EA. This is pound averaging or dollar cost averaging or whatever you want to call it. Position trading. So this is running since January this year. So this is testing from January. So we're going to hit Trump in a minute, right? In a minute, watch this in a minute, in April. Just coming up in the next 3 to 5 days, Trump is coming, okay? So this is why spacing is important. You watch this make an absolute fortune. But Trump's about to get into office. In a minute. What did the Aussie CAD do in the tariffs? Right, now you're in trouble. 1, 2, 3, 4, 5, 6, blown. Yeah, that's why spacing is important, and this is why you don't do this on the 5-minute time frame. Yeah, so first squeeze, dead. Yeah, because you're spacing your entries on this. God, that took a long time to prove, though, didn't it? Before it actually blew the account, it made 25% gain. So there's probably a way you can, if you set your if you set your drawdown control at a maximum drawdown target of. So we ran up by 20, didn't we? 25. So if we used 15 as a maximum drawdown, that will stop that blow. Probably too fast, though. That's probably a bit too tight, actually. I'll go 20. So yeah, so that basically is spacing trades a third of an ADR apart. You see how fast it gets into drawdown? Because if you think about it, price exceeds its average daily range 42% of the time, yeah? So the ADR indicator, got the statistics on it here. So 42%, you can't see it because there's lines in the way, but 42%. So it gets beyond ADR 42% of the time. If you're spacing a third of an ADR or half an ADR apart, in this one day alone, you could be taking somewhere between 2 to 3 trades just to get there. If you get a 200 ADR day, you could be in 6 trades, potentially. Probably not, but because you have to wait for price action, but probably maybe 4 or 5 in 24 hours. If that 24-hour candle is the start of a 7-day rally, it's dead. If you space it 3/4 of an ADR apart, the first trade you take will be extended. Yeah. because obviously you're waiting for a mean reversion opportunity, which means price has to have pushed up. So if price is pushed up, it's likely already at ADR. So the odds of it getting much further reduce dramatically. If you're spacing 3/4 of an ADR and it pushes for 6 or 7 days by an ADR in one go, maximum you'll be in after 1 week is 6 to 7 trades, maybe 8. And that's an entire week of squeezy price action, of which then it will probably want to retrace before it tries a new leg. So, this is why spacing is so important. That's what I was trying to prove without making 25% profit by accident before it did it. So I'm just going to run that with that max drawdown just to show you. So the EA obviously will automatically close those trades off when it gets to 20% drawdown. So you'll see the P&L rally up, and then all of a sudden it will just go boom, and it'll pop. So, but what it does is it protects. That's what that setting is for. It's to protect your account. It's to stop that happening. So if you get into 20% drawdown, we're going to shut. So it's a last line in the sand kind of move. Thanks for the position trading philosophy lesson. Show the monkey something shiny. Yep. Show the monkey something shiny. You'll snatch it out your hands and run off with it. Your strategies are thoroughly back-tested, proven profitable. Why don't the 90% who lose just position trade? I don't know. Ask them. There you go. So there's the loss. There's Trump. Yeah. So what that's done is it's literally protected our account and brought us back to break even. So we haven't lost anything. But how often does Trump happen? I mean, once every 4 years, doesn't he? At the moment, potentially, if he changes the law, it could be forever. He could do a Putin, couldn't he? Change the law, and I'm going to actually just stay. Wouldn't put it past him. But yeah, I don't know why people don't position trade. They do, but the people that are constantly hunting for the Holy Grail are never going to be happy with position trading because it doesn't generate enough profit. Most people are in a position where they want to be able to pay the bills and go full time doing this. That's the problem. They don't realize that traders are businesses like any other business. So you choose this as a business, you have to treat it like a business. If you're going to do this as a business, you need capital. Yeah, you can't start a business up without capital. What people want from trading is to invest no money and pay their mortgage. That is just not going to happen. If that was the case, everybody on the planet would be a billionaire. No one would have a mortgage. We'd have no debt, and everybody would just be rich. Yeah? People can't see, for some reason, past the smoke and mirrors to understand that there's no way I can give you $1,000 and press a couple of buttons and you give me 10,000 back. I can do that in a casino. I can do that trading, but it's not going to be because of any skill or anything I'm doing consistently. It's going to be because of luck. If I'd have pressed the short button in April, I would have paid my mortgage off. I didn't know Trump was going to do that. And this is the thing. Someone on YouTube, and I'm sure there's hundreds of them, have shown you that trade that they took, and they've shown you the money they made, and their viewership has gone through the roof. But they're just lying. And that's not what I do. I tell the truth. So this is the problem. People don't want to know the truth of it, do they? This is the thing. They want to know how they can make an absolute fortune with very little effort and no money. And this is why I've got no people in here, because I tell them they can't and they don't believe me. And they go off and then they come back 5 years later. Maybe. I don't know. I've only been around for 5 years on YouTube. So maybe they all start trickling back in now going, you were right. Remember I told you at the beginning of Bootcamp on day one not to go off and system hop, yeah? Now, would you like to go back and watch that 5 years ago and actually pay attention to what I said? I wish I had. I did exactly the same thing. Everybody does. It's part of the journey. I don't think you can stop it, to be honest. 3 years ago before Lee, I traded $1, $2, and $3 and lost. Now I trade 0.01, 0.02, and 0.03 and win. It's all about time travel, yeah. Exactly. Pos is ironclad, printing money. Yeah, it does print money, but it prints money until it doesn't print money. Yeah, you've got to have a safeguard. Yeah, you've got to pull the plug. You know, this is, you see me pull the plug. I pull the plug. I don't do it automatically with the air. I do it manually, but I pull the plug. Sometimes you will have to pull the plug. You can't let it go on forever. Position trading isn't about sitting in it, hoping, crossing your fingers for life. It's making decisions. You've still got to make those decisions eventually. I'm going to lose $30 today because of that. Oh, I'm already out. Oh, yeah. No, sorry. That's right. Okay. So I put that trading stop on. Did I put, what size? I put a wrong trading stop on that, didn't I? I put a really tight trailer on that of 2.5 pips, not 25. But anyway, that's good. So it's got me out of that little silly trade. So I've made 18 cents today, and it's cost me 38 cents in commission to prove the point. So actually, it's only cost me 20 cents. That was not bad, was it? X Capital. Morning, Lee. How can I get your EA on the website? Well, they're all on the website. There you go. There's the expert advisors section. Everything's in there. Watch videos first. Understand what they do. Guess I have to put on my hot pants and halter top. Need cash for account. Yes. If you haven't got money, you can't do this job. This is the thing. This is where prop. I love prop and I hate prop, because prop is completely skewing people's view of trading, because they are selling the dream and they are showing the dream, but they are not telling you the dream costs 5 to 10 evaluations before you realize the dream. And that money that you are going to spend, you haven't got, because if you had it, you'd be trading with it. An average prop evaluation is going to set you back $200 to $300, isn't it? If you do 10 of those, you're spending $2,000 to $3,000. You're better off sticking $2,000 to $3,000 in a broker account, but in a very high risk setting on the opening range breakout EA, and crossing your fingers for a good week. You're going to make double that. They're trying to give people with no skills or experience access to $100,000, $200,000 of equity. They don't know what to do with it. Too much. And they're making an absolute fortune, aren't they? As we know. These prop firms have got their own TV channels now. Yeah. Because they are making 10 to 15 million a month in evaluation fees. And they give out a couple of million in payouts. So a select tiny few. Brilliant business, but it's not what this isn't how this works. If you got 50 to 100 grand, you can do this job. If you haven't, you're going to struggle. If you've got 10 grand, you will be able to make money. You'll be able to make enough money to make it worthwhile. But it's what it is. We all need to appreciate how instantly profitable it is. Make a simple 3 to 5%. Need to appreciate how insanely profitable it is to make a simple 3 to 5% a month. You know, if you look at any savings account, right, the S&P 500 returns 8% a year on average, right? So if you were to just buy the S&P 500 at the beginning of the year, yeah, you're going to make somewhere in the region of 8% return, because that's what it does. It goes up. Unless it's in a bear market. But when you look at the bear market, even in the bear market, you'd have bought in January in the bear market, which is here. Yeah. February, March, April, May, June, July, August, September, October, November, December, down here. That's your loss. If you look at the loss there, and then you look at the average run up, something like that. If you look at the average run up on the S&P in a year, it's substantially more. Yeah, I mean, way more. Yeah. So all a bear market does is it corrects a percentage of previous yearly 8% increases, which is why on average it will increase by 8%. This is better than any pension fund or savings account you will ever find anywhere on the planet. However, it is annual returns. What we're doing is as traders, we are taking this methodology and strategy, breaking it down into monthly cycles that we can hopefully achieve 3, 5, 10% out of in a month to double our account in a year. So we can outperform the S&P 500 by tenfold. That's what trading is. And this is what banks and institutions are doing all the time. They are playing the micro movements within the overall long-term movement. Everything is fractal in markets. It's same thing happens on all time frames. So all you've got to do is find a time frame and a strategy that can return somewhere between 3 to 5 to 10% a month. Yeah, but in a safe way. And this is what people want to be able to do, but they don't have enough capital to do it. So if you want to make, as I do on average, sort of 10 to 15% a month, if you need to earn 10 grand a month or whatever, you're going to need 100 grand to do that. If you've only got 10 grand, you're only going to earn £1,000. If you've got 20 grand, you're going to earn 2 grand. So if your mortgage and all your outgoings a month, 3,000, minimum, absolute minimum money you need to invest in trading is 30,000. But if you're doing this because you need to earn money, you haven't got 30,000. So you're stuck in the spiral. You can't get out. So you go to somewhere that promises you 30,000, 50,000 or 100,000 for just $300. And for some reason, you think it's a good deal. Good net, prop. Yeah, I've got it absolutely sewn up. I think regulation is coming as well. I got an email from Apex, who are one of the big futures prop firms, saying that they are talking to the other, or the other prop firms are talking about putting together a sort of like a conglomerate or what you'd call it, a club, if you like, for a better word, of all the prop firms, because people are playing the prop firms. So I will go out and I'll sign up with Top Step, with FTMO, with Apex, with ABC prop firm. And on each of those accounts, I will do the opposite on one that I do on the other. So in any day or week, pretty much 90% guarantee I'm going to pass one of those four, because if it goes up, I win. If it goes down, I win, because I've gone long and short at the open. So as long as it doesn't close at the open, I'm a winner. So there's a lot of people playing the game like that with hundreds of prop accounts. So they're all clubbing together to make sure that all these people get stopped. And what they're doing basically is they're not going to stop people doing evaluations, but what they are going to do is stop half the payouts. What's that do? Makes them more profitable. That's another rule that's going to come in that says if you're with any other prop firm, we're going to share your trades, which means that if you're taking longs on us and within 5 minutes you're taking shorts over there, we're not going to pay you out, and neither are they. Yeah. So there's all this going on behind the scenes as well. It's kind of self-regulation, because there is no global regulation in prop, because all it is gambling, isn't it? Think about it. You're paying $200, $300, $500, whatever, $100 for a demo account. They're pretending to give you some money, which isn't really the money you've earned. It's the money that all the other poor sods have lost. They're giving you their money. And then eventually you'll blow that account and start the cycle again. And that's basically all it is. So they're now looking for ways to pay out less money so they can make more money. Brilliant. What a business model. And you can white label and start a prop firm up in 48 hours. Obviously, you're going to need some money to do it because it's a business. I'm old enough to remember 5% savings accounts. Yeah, and 8%. Yeah. It's not, we're at the moment, the highest interest rates we've been at for a long time. So, yeah. Criminal syndicate. Yes, they are. It's not criminal, is it? It's totally legal. All they're doing is they're forming a little group of, let's see if there's a way we can make a bit more cash people. And there's nothing wrong with that. It's business. But the trouble is 90% of people are blind to what's going on, because the only people telling you about prop are the people that are YouTubing it. And the people that are YouTubing it are affiliates for the prop. Yeah, that guy that I said about, who I watched his video, 40,000 views, yeah? All over it was adverts for a prop firm. In the description were adverts for a prop firm. On the screen were adverts for a prop firm. He was trading on a prop account. Yeah. So what's he doing? Basically promoting a system with 100% strike rate that's going to make you buy his system and go to a prop firm, which he gets an affiliate commission from. Yeah. Knowing damn well that that thing is going to blow very shortly. And what you're going to do is spend more money on prop, which he's going to get a kickback on. So he does one video, gets 40,000 people, signs up 50 people to a prop account, earns X $1,000. And then the people that are going to continue to do that and try it again and again and again, he just keeps having money coming in. Never traded in his life. That's the industry. Unfortunately, isn't it? I thought hedging was not allowed on prop firms. I don't think it is. Some do. Bit of a random statement. I haven't mentioned the word hedging once today. I don't hedge. Oh, I suppose I mentioned the stock index hedge. Yeah, I mean that strategy is hedging, but I don't know. I mean, I'm not hedging, am I? Here, this isn't a hedge. I've gone long. I've gone long. If this comes down, I will get hedged. Yeah. If you're trading futures, you can't hedge. It's not a case that they don't allow it. You can't hedge in futures. So just trade CFDs. Trade with FTMO. That was the right call to get out the FTSE. Just not going anywhere, is it? So it is not allowed on a singular firm. These guys are hedging across multiple firms. Oh, right. Yeah. So I see what I mean. Yeah. Yeah. So what I was talking about with going long and short, obviously, is you, like I said, you trade one account with FTMO, you trade one with Top Step, you trade one with Apex, you trade one with CTI, you trade one with whatever. So you have 6 or 7 different prop firms that you're trading with. And all you're doing is you're taking opposite trades on different accounts. You're going to win. Franco, enjoy the weekend. It's 4 a.m. in Franco land. Have a good weekend. Long NQ on Top Step and then the same short on the NASDAQ on Apex. Yeah, exactly. But they know that. They know this. I'm surprised, actually, it's taken them this long to actually do something about it. But the thing is, it doesn't, you know, and it's a strategy that does work sometimes, but it doesn't work other times. So let's say, for example, we do it here. So let's go long on the DAX and we'll go short on the DAX on the other firm. Now, if it goes up here, I win today, and this one loses, right? So day 2, I'm halfway to target. What do I do today? I'll go long on the DAX on the same account and short on the DAX on the other account the same. Now, today, it goes down. So this account recovers the loss from yesterday. This account loses the profit from yesterday. So that resets me back to day 1. So you've got to be very clever about how you hedge it. And there's obviously mechanisms and algorithms you can put into place to make sure that there's a positive risk reward ratio. But, you know, it is just gaming the system. It's not trading, is it? It's finding an edge. It's like people that go in and count cards in casinos. Yeah. So if you're a blackjack counter, yeah, they've got an edge. So what do the casinos do? If they find someone counting cards, they kick you out. It's not illegal, but we're not going to let you do it. There's nothing that says you can't do this in prop, but they'll kick you out. It's about finding an edge. Everything in life has an edge. There's always a way to do something in a way that is actually better than another way, or a way to game a system, isn't there? But you've just got to find it. The easiest thing to do is to rely on making less money and do it properly, in my opinion. I've tried everything else. In the current market conditions, what percentage entry are you using? 0.25. No, 0.2, sorry. Yeah, 0.2. Uh, 0.25 is going to get you into 25% more drawdown at the minute. Again, do a test. Yeah. So whenever you're doing testing, just run a system parameter permutation test and just literally do the same thing. So do that. Start at 0.2. Go in 0.05 increments up to 0.4 or whatever you want to do. Yeah. And let the EA test that for you. So if you run that system parameter permutation test, it will tell you what will happen. And it will tell you the result, and it will tell you the drawdown, because it can export all the data. So, it can tell you day by day, if you use the export facility in the EA, what's going to happen. And it shows you your drawdown, how much it's going to draw down on your account by. And you see the difference. That's the key. Knowing what the worst case scenario is with a strategy prepares you for the worst case scenario. So if you trade a strategy and you've only ever seen someone on YouTube give you a 75% strike rate and generate 10 grand's worth of profit, as soon as you have 4 trades that lose in a row, you're immediately discounting it. But over a period of a year, a 75% strike rate on something taking 100 trades is going to lose 25 times. There's nothing that says it can't have 10 losers in a row in 1 week. Yeah. So if you know the worst case scenario, what is the biggest losing run it's ever had? What's the most drawdown it's ever gone into? All the statistics when you do back tests and system parameter permutation testing. When you trade a strategy and it suddenly starts to lose money, it's well within the constraints of what you've seen in the back test. So it's absolutely fine and normal to let it run. If it suddenly goes outside of those constraints, i.e., it never had a losing run of more than 5 trades in a row, you stick it on a chart and it suddenly goes straight into 7 losing trades, I'd be questioning it. Why is that happening? If it's never gone into more than 10% drawdown and all of a sudden I trade it and it's flip-flopping around like this, and then it has a month where it goes into 12% drawdown, I'll be questioning it. But if I'm expecting it to lose 5 in a row and I'm expecting it to go into 10% drawdown at some point because that's what it's done in a 5-year test, I'm not going to be worried when that happens, am I? So it's all about preparing yourself for what's coming. So I know the drawdown limitations in position trading. I know the ORB statistics. So when stuff happens, I lose 4 days in a trot. Yeah, that's fine. It's lost a week. It's had a week where it's not won once. It's not had one winning trade in an entire week, and it's hemorrhaged 6 grand. Happened in testing. So it's not going to be abnormal when that happens, is it? Prepared yourself for it. There you go. So there's the difference in drawdown. Look. So that run took 887 or 8.5% drawdown with a ADR risk of 0.2%, which is what I run. This one here took $1,800 in drawdown, and that was risking 0.4%. Yeah. So that and that is a 50% increase in drawdown. So you will take way more, double the drawdown I will. So when I'm sitting here in a squeeze and I'm saying, oh, I'm in 7%, you'll be sitting there going, I'm in 14%. Yeah, who's going to be panicking more? That's what statistics show you. That's what system parameter permutation testing and robustness testing is all about. What the outcome of this is that there is not one way of losing money. Doesn't matter what risk you use on that particular instrument over that particular time, every single run made money. You didn't lose money for that entire period, but you could have been really uncomfortable or not uncomfortable. That's the difference between those system parameters. Which is why you test all system parameters. You test everything. Make sure that when you come out of it at the end, you're going to have at least for me, it's got to be a 65 to 70% profitability. So if I run 100 tests, I don't want more than 30 of them losing money, because that puts an edge in my favor of 70%. Yeah. So I will pick from the 70% profitable a set file that I'm comfortable with based on drawdown, number of trades, profit factor, and whatever other parameters I'm testing. Yeah. That's it. If you can't do that, then you're never going to know what's coming in the future. So if something goes into 8% drawdown on an individual instrument, comfortable. Not comfortable, I mean uncomfortable, but within parameters. When Trump happens, it's going to go outside parameters. If COVID hits, it's going to go outside parameters. If the Swiss franc removes their peg, it's going to go out of parameters. There's nothing you can do about those situations. Those are new flies in the ointment you've got to deal with as and when, which is why there is no way to place an EA on a chart, let it go on full autopilot and expect it to just print money in the way it has in the past, because it's never going to be the same. The future and the past are different. But you know what it's going to be parameter-wise. I'm using prop firms to actually learn to trade while minimizing personal risk. Okay, so I'll ask you a question. Why don't you just use a demo account from your broker and not spend any money doing that? Why are you paying X amount to a prop firm to get a demo account? They're free. Go to your broker, they're all free. Just a thought. If you're learning to trade, don't pay someone to access the software to learn to trade. Am I trading all pairs? No. So that's what I'm in at the minute. I'm not trading all pairs because I want to keep the exposure tight at the minute. But if you want to trade all pairs, trade all pairs. Just be aware that if you get into the US dollar 6 times and the US dollar goes parabolic, you're going to go parabolic 6 times. So, you know, as in the Bootcamp, keep your exposure under control to any individual currency. The reason I'm trading those 7 at the minute up here is because they are uncorrelated. So they move independently with less than 60% correlation at any time. So I know that if I take them, it would need for every single one of those to go in the opposite direction at the same time to cause me a problem, which is not impossible, but highly unlikely. So, you know, so it's, I've covered it before, but if you're trading the Aussie US dollar, yeah, there's no point in trading the New Zealand dollar US dollar. Yeah, so that's the Aussie US. If you look at the New Zealand US, yeah, same thing. So there's no point in trading the New Zealand dollar US dollar. There's no point in trading the Aussie dollar US dollar together. Trade one or trade the other. There's no point in trading the Euro US dollar and the pound US dollar. Trade one or the other. Aussie yen, New Zealand yen, one or the other. CAD yen, Swiss yen, I think. One or the other. US yen, yeah. So US yen does that. CAD yen does that. It's the same thing. So you can trade all of them, obviously, but bear in mind you're going to make double the profit when the market goes your way, and you're going to take double the drawdown when the market doesn't go your way. Prop firms can pay out. They can, but you haven't been paid yet, have you? You're learning to trade. You're going to need a good 3 to 5 years before you get paid. 2, maybe, if you're lucky. Consistently. There's a guy out there who is a prop affiliate, who's got a YouTube channel, right? And he came clean recently in a video in the last month. And he gave you a full breakdown of his costs and his payouts, because he made 2 videos going, I've just taken my second payout. And he was like hyped about it. Brilliant. Everyone was like, amazing, well done. A few weeks after that video, he released his accounts as to what he's earned and what he's paid in prop evaluations over the last few years. How many tens of thousands do you think he's actually in loss for? I'm not going to tell you. You can probably go and find a video if you want to, but he's had 2 payouts. He's down over 10K. If you look at the statistics on payouts, less than 1% of people, less than 1%, 1 in 100 get paid. Out of those ones that get paid, less than 0.04 of those people, yeah, so let's say there's 1,000 people, right? 100 of them get paid. No, 10 of them get paid. Out of those 10, only one of them will make it to their second payout. 0.04 is the official statistic. Yeah. So think about the game that you're in, right? If you are in the 1% club, you'll get paid. If you're in the 1% of the 1% club, you might get 2 payouts or more. Who are the 1% in the 1% club? Seasoned traders with 5 to 10 years experience in the markets. Who's everyone else? Everyone else. Go and look up the stats. They're published on some prop firms. Yeah. Why do you think Top Step shows you the top 25? Yeah. 50,000 traders, they show you 25 results. Some of those people in the top 25, you look at their payouts and go, that's not much. They're in the top 25 out of 50,000. They're the 1% of the 1%, and they're earning money. But they're earning enough money to pay their mortgage. Yeah, 100 grand a year, 150 grand a year, 1% of the 1%. Because you're playing a game with statistical improbability. This is a random moving market. Yeah, you're applying a methodology and a pattern recognition system to a random instrument. Yeah, it's like trying to shoot a balloon in a wind tunnel with a pea shooter. Yeah, it's never going to go the same way 2 seconds in a row, that balloon, and yet you're going to take the same shot with that pea shooter 100 times and miss it. Because this is not, you know, this day here on the DAX, no one on the planet has ever seen this before. Because you know what? It's never, ever done that. This exact price action pattern you are seeing here has never happened on the DAX. Statistically, you will never find the same day twice. Exactly what this did to this day has never happened ever. And it will never happen again. Because there's over 1 million points of price that it moves through within a session. The odds of you getting exactly the same layout of 1 million points over every candlestick every day, it's impossible to happen. It's not. The odds are there. Someone's going to do it. I mean, that's probably a lie. It probably has done exactly that at some point in the last 100 years or so. But we haven't got charting going back that far. So this is what they're doing. They're getting lucky, or they're getting consistent because they do know how to play out an edge, which is why you will see them. Like the only reason I mentioned Top Step is because short on the FTSE, we've broken down. While I've been talking, I've taken that trade that I didn't want to take. Never mind. But yeah, the reason I use Top Step is you look at some of the people on there, like Coach Dakota, for example, who is in that top. He's been trading for decades. Yeah, that's why he's up there. That's why he's a coach. But he loses regularly. Regularly loses. But the thing that makes him different to the other 99 million is he knows how to lose. Like I know how to lose. I lost 1,300 yesterday. Doesn't matter because the edge is there. I know the edge is there because I've statistically back tested and robustness tested multiple variations of the edge. And I know it doesn't matter what I do. The edge will play out. Yeah. But most people don't know that. They won't accept that because their psychology doesn't allow it. And they would just go and hemorrhage cash and give it to the prop firms. Where can I get that set file? Which one? For what? This, what set file? You have to be more specific. I have many. That's all I've got for you today. Again, I said that actually hours ago, didn't I? But let me know which set file you want. It's probably in Discord. If you're not in Discord, get yourself in Discord. That's where all the set files are. This one that I just made up this morning if you're referring to this one for the position trader, I literally just made this up on the fly this morning. So I've never tested this set file before. It's new. I just made it, literally just made it up. But there's the settings. You can screenshot this. There's the settings for the position trader EA. For that set file. Do you trade the US markets? Yeah. You're obviously new in here. I'm back this afternoon at 2:30. We'll trade the DAS, the NAS, the S&P, and the Dow. So live room this afternoon, 2:30. No live room on Monday, everyone. Remember that. Not here. UK, bank holiday. I'm not here Monday. So just remember that. So yeah, back this afternoon at 2:30 for the US session. Lights are about to go out. I've got this weird thing with this lights. I've got this remote controlled light, and it just, for some reason, it's on in the mornings. It goes, turn off after 2 hours, and I haven't worked out how to not do that. Anyway, yeah, so back this afternoon at 2:30, we'll trade the US, and we'll do recap of the week. I didn't even go through the recap of the week. We were waffling this morning, weren't we? Monday's also a holiday in the US, is it? It is. Yes. Yeah. So yeah, off Monday. No one's here Monday. So Powell, for some reason, is speaking on Sunday. So yeah, back on Wednesday. So members will be in the morning, members stream at 8 o'clock, and then US session Wednesday afternoon. Thanks for the follow, Isoteri. You have subscribed. Thank you. So yeah, back on Wednesday, and we'll have a look through what's gone on over the early part of the week. So I'm going to close this DAX off because I've just shorted the FTSE. I'm not convinced I actually want to be in this short either. So this is obviously a potential propulsion gap bounce play. I'm up on the morning anyway because the loss on that is going to be 460. So worst case scenario, we're going to bank 300 odd on the morning. So I'm not going to risk a DAX short. But if this flags and goes for the lows, obviously there's potential for more profit on the FTSE this morning. That's perfectly fine, that target. So propulsion gap to the downside. So we've got this low from the US session yesterday, which was kind of pre-market lows, which isn't real. But so yeah, that's potentially a bounce point if we do break short. But there is that propulsion gap at these highs, which is a good shot. So if you know what, considering I'm up 720 on the morning, what I'm going to do is I'm going to move my partial to a 1-to-1. So I'm just going to take a partial at 1R. If it breaks, I've got a feeling this is going to stop out, unfortunately. But we'll see. It might just flag. It's quite a steep drop, yeah. But this is, this is what we talk about, isn't it? Yeah. So one of two things is going to happen here. It's either going to use a market structure bounce out of propulsion to continue short, or it's going to be a propulsion bounce in a second leg long. Those are the two things that are going to happen. One of those two things is going to happen, probably. Or the other option is we are going to have a strong sell-off, flag break short. Yeah, those are the three scenarios that I see. So I'm playing, at the moment, the flag break short. If it is a first leg bounce down, I'm probably going to stop out. So for me, this trade has one of three outcomes that work for me. The other two don't. So the odds on this are a 33% strike rate. It's not a great trade, which is why I was considering not taking it. But I'm in it, so I'll let it run because it might work out. It's going to work out or it's not going to work out. Nothing I can do to cause anything other than either profit or loss. So it will come. Right, I'll be back this afternoon. If you need anything, I'll be in Discord or Telegram. Back at 2:30. We'll look at the US markets. Anything you need till then, I'll see you there. Otherwise, 2:30 this afternoon. Have a good day. If I don't see you before, have a good weekend. I'll see you next week. Have a good one.